Hello there. Since I did the last question and answer video, I mentioned that I'm always happy to answer any questions about trading and invited your questions, and pleased to say that I had a lot of feedback, loads of questions came back, and want to answer some of those. Just going to tackle one for the moment. A very good question what came in. Somebody asked me if I traded penny stocks, and if not, why not? The answer is no, I don't trade penny stocks, and here's why. It's very simple really. I want to try and make my life easy, and to do that I look for stocks what have got good range and good momentum, and penny stocks don't really have range or momentum behind them, which makes them very hard to trade profitably. We'll have a look at an example, and that will make it a bit clearer. Okay, this is a chart for RIM, Research in Motion, and as you can see that's a line chart. Obviously I don't normally trade off line charts, I normally trade off candlestick charts. I've just made this a line chart because it makes it easier to illustrate the point. And the point is that if you look at the price range on this chart from 9 o'clock, I hope you can see it on the video if it's not too small, but the chart starts at 9 o'clock over on the left. If you look at the range, price range from 9 o'clock, which is about $53.80, to about 11 o'clock in the morning, the peak at about $55.50, so that's a range of $1.70. So in 2 hours the stock price there has moved $1.70, and to catch just a very small part of that move can be very profitable. You don't need to catch all of that move to do quite well out of trading that stock. Even if you took, for example, just 25 cents of that out of that move, and you were trading 1,000 shares, that would be worth $250 in profit. 25 cents out of that particular move is just 15%, so you've only got to take 15% of the move to make potentially $250. Now if we go and compare that with a penny stock, alright, this is ACAD, another Nasdaq stock. You can see this one trades around the dollar mark. Previous stock RIM was around the $53 mark, which is bang slap in the middle of what I would call a regular range. This is down the high end of a penny stock range, around $1. Now if we look at the same time frame, 9 o'clock till 11, you can see that the price starts off at $1.04 and moves up to 11 o'clock at a peak of $1.10, so all of 6 cents. If you wait until midday it does get up to $1.14, so an amazing move there of 10 cents, which is not to be sniffed at. I mean, you know, as a percentage of the stock price it's a reasonable move, but the point is it's only 10 cents. If you wanted to try and make any decent money trading that move, you'd have to catch all of it, all 10 cents of it, or 6 cents of it, however long you were trading it for. If you remember with the previous stock, just catching 15%, any 15% of the middle of that move would have been worth 25 cents. Here you've got to catch 100% of the move, which is 6 times as much of the move, to make 4 times less money. And really I don't want to work 6 times harder to make 4 times less cash. Now you might say to me, alright then Harvey, thing with penny stocks is you can trade more of them, they cost less, so you can buy more and trade in bigger size, which is okay in theory, but I'll show you why in practice that doesn't work, and here's why. This is that RIM chart again, the first one we looked at, and you can see I've added the volume on here. Now each of these volume bars is a 5-minute interval, and we can see that between the hours of 9 in the morning and 11, the volume on each of those bars is around 100 to 200,000 shares. So it's between 100 and 200,000 shares being traded every 5 minutes, which means if you want to get in and out with 1,000 shares, it's going to be pretty easy doing so. There's plenty of volume around. Now if we look at the ACAD chart for the same time frame, again now with volume added on, hopefully you can see the problem. The volume on all of those bars is under 20,000, and for almost all of them it's well under 20,000. In fact it's well under 10,000. There's just a couple of bars where it peaks a little bit, which means if you wanted to trade even 1,000 shares of this, you're probably going to have trouble because there's just nobody on the other side to take the trade. This is what I mean by thin volume, and this is why another reason why it's so difficult to trade penny stocks. So you've got everything stacked against you really. You're trying to catch all of a move, and you're gonna, if you want to make real money, going to try and have to trade big size, except you can't really trade big size because there's no one there to take the other side of your trade. So I hope those charts make it a bit clearer why personally I don't like to trade penny stocks. Just as a quick summary, I like to make my trading life as easy as possible, and to do that I'm quite happy to catch a small part of a large move because that's easy to do and it can be very profitable, as we've seen. And if you're trading penny stocks, then essentially you're trying to catch a large part of a small move, which is obviously much more difficult and much less profitable. Alright, hopefully that covers penny stocks. As I say, add lots of questions, I'll answer some more in future videos, but of course if you do have any other questions, keep them coming, always happy to answer by email. Alright then, hope that was useful to you.